Very good morning to all of you, and welcome to this morning's UFI Connects session. My name is Kai Hattendorf. I'm the CEO of UFI, and I'll be your moderator today. And a very special welcome to Roger Martin Fagg, our speaker today, and I will hand over to you, Roger, in just a moment. But let me briefly spend a moment to explain what UFI Connects is to those of you who are new to the format. Now, we've launched this series of online sessions, of online talks, of online panels for a very simple reason. As the COVID-19 pandemic is keeping us as exhibition and events industry professionals apart from each other, our need to talk, to discuss, and to learn is probably bigger than ever. And UFI Connects is a program that will serve as a proxy for all of us to do just that while we cannot meet in person. You will have seen that most of our regular on-site events had to be postponed or canceled this year, and we are looking to host them later this year wherever and whenever possible. But in the meantime, we are running this series of online events to make sure we can all stay connected and we can come together and discuss the burning questions that our industry is facing through the current pandemic and in the recovery phase afterwards. Now, you can see all the previous sessions we've done on demand, as well as the announcements for future sessions on a designated webpage at www.ufi.org/UFIConnects. And please do reach out to us and let us know if there is a topic you want us to address, if there's a session you want us to run. We are busy putting some programming together for the coming weeks, and we appreciate your input. That said, some housekeeping notes. Now, this is today's conference room, and it works just like a normal conference room. So you have a moderator, you have a speaker, and you have the audience. And we are looking for lively discussion and a lively Q&A session after Roger's presentation. So I encourage you to ask questions. At the same time, we've put you all on mute, so we've closed your microphones for the time being. So now you wonder, how do I ask a question if I'm not allowed to speak? Now Zoom has a chat function. At the bottom of your screen, you'll find a couple of navigational items. One of them says chat. Most of you are using it already, as I see many people saying good morning there right now. Please use this chat function to ask your question. Now, the UFI team, I'm moderating from Bonn. In Paris, we have Pascal and Karen and Diana. They are running the show, so to say. They are operating the microphones. Jana is monitoring the chat. So we will pick up your questions there, and we will reach out to you on the chat before we bring up, hello Pascal, we will reach out to you before we bring up your chat question so that we can unmute you for that moment, and you will be seen on screen if your video is on to ask your question. So, but enough of the housekeeping, let's jump right into it. Now, in early February, we ran UFI's annual Global CEO Summit in Italy, in Rome. And obviously, we didn't know it then, but this has so far been the last physical event we have produced for the time being. Back then, we had Roger with us, and he was rather upbeat about the global economic development if we just managed to contain COVID-19, which was back then not yet a global pandemic. Now, 2 months later, most of the world is in lockdown. COVID-19 is a pandemic with reported cases numbers globally still rising very, very fast. At the same time, the city of Wuhan, where the outbreak began, has lifted this week all the travel restrictions and the travel bans. And air freight levels from China are much higher than usual for this time of the year. So we asked Roger for an update, this time not on stage in Rome, but on the screens on a screen from his home. So welcome, Roger, to this UFI Connects. And before I hand over to you, I want to take the temperature in the room and of everyone here with us today with a short poll. Now, obviously, there are various economic models out when it comes to the question of the recovery after the current economic standstill. And there's talk about a rather quick recovery, which is known as a V-shaped recovery. There's talk about a U-shaped recovery, so we go through a twirl of disillusionment and then come up again. And there's talk about an L-shaped recovery, which wouldn't really be a recovery, but just essentially a depression. So let me ask you, And you should see a polling question on your screen right now. What type of economic recovery do you personally expect we will see after the COVID-19 pandemic right now? Please choose your answer. I'll leave the poll open for a few more seconds. Do you foresee a V-shaped, we wrote a Y-shaped here, rather quick recovery, like fast in, fast out? Do you see it becoming kind of U-shaped? So we're going to be in this kind of downturn for a while, but then we come out strong? Or do you see it lasting for a long time and taking an L shape? So we have a lot of votes in. I'll give you 5 more seconds. 3, 2, 1, and let me share the results with you on screen. So there you have it. Whereas a few weeks ago, everybody was very optimistic about this V-shape, fast in, fast out. The majority of our audience today is believing we are in this for a little longer, and the majority is sharing we'll see a kind of U-shape development. So with that, there you have your opinion of the audience, Roger. Now please tell us what will really happen with the world economy next, and what will this mean for our industry? Roger, please take it away.
Thank you, thank you. Let me just share my screen with you. I hope you can all see that, and a very good morning or afternoon, depending where you are in the world. It's very good to have this opportunity to explain to you why I hope those of you who think it's going to be a U-shape are wrong. I hope I'm right and you're wrong. What I want to do is explain why I have the opinion I have. So we must start with what the economy is. It's the process of creating added value, which means organizations doing something that other people will pay for. And at an individual business basis, the definition of added value is your sales revenue. From that, you subtract all the payments you make outside your business, and then you're left with your net profit, wages and salaries. And it is net profit and wages and salaries which is GDP, or nominal GDP. So when economists are talking about V, U or L, they're looking at what is happening to real added value. Now, the question we must address is how in mature economies we measure added value. Typically, we take sales revenues and we measure that data from expenditure surveys and VAT tax returns. And that gives us a quick measure, a monthly measure. And then quarterly, we get data from incomes earned. And that data is obtained from tax returns. And in Britain and probably most of Europe, pay as you earn, which is business paying tax to the government. Now we are in a very unusual position today where, because of lockdown, for many businesses, sales revenues are virtually nil, if you're a restaurant, for example. But because in many of the mature economies, governments are maintaining at least to around 80% people's wages via subsidy to companies, we've got now a big difference in the two measures. The sales measure shows a disaster. The income measure will show things aren't so bad. And you will have heard in the news that France yesterday, 10% reduction in GDP. That will have come from the sales data, not from the income data. And I very much expect in time people to say it wasn't as bad as that initial figure suggested. So if we look at lockdown, it seems to be affecting around 15% of the labour force in the EU. The majority of these are young and low paid. For about 85% of employees, income is close to normal due to government subsidy, wage subsidy policies. So if we're going to measure GDP over the next 6 months, taking the expenditure method, for many countries, it will show a decline of around 15%, which is certainly as bad as 1930. But if we take the income method, we will only be seeing a decline of around 5%. So the big question for all of us is, which figure do we use? And what statisticians tend to do is try and create an average, because there's another measure called output, which is done on the survey of businesses. And I would imagine using the output plus the income method will show a decline of around 5 or 6%, which is roughly in line with what we saw in 2008. I am concerned, however, that the media are always reporting the worst numbers, and that might have an impact on people's confidence. I suspect from the survey we've just received from you, you have been affected by that. Now, the government is trying to maintain short-run economic activity. And short-run economic activity is determined by how much money there is in the economy and how often that money gets spent. So there are two elements: how much money and how quickly it gets spent. Normally, a recession is prolonged when the money supply stops growing, or indeed, as it did in 2008, it contracts. So if you think of a pipe, a water pipe, and in that pipe are all the businesses of a country, money going into the pipe is the equivalent of water. That money flows through the pipe under normal circumstances and creates nominal GDP. The pandemic is unusual because money is not being reduced. In fact, because of government activity, the amount of money going into the pipe is increasing. The problem is it's not flowing because people can't go out and spend money. So, if we look at where the money comes from, central banks are effectively creating that money out of thin air and lending it directly to their government. They're doing this to prevent interest rates from going up. And it's expected, as governments continue this process, around 7 trillion of new money will enter the global economy, certainly within the next 18 months. Probably the bulk of it in the next 6 months. Now, this is equivalent to 10% of global GDP. And this money is flowing into businesses through wage support and through loans to keep them liquid and to allow them to keep paying employees, even though the employees are not doing work. So we have a situation which we've never seen before in a recession phase. Incomes are being maintained while expenditure contracts. This is a chart, it refers to UK businesses, but it's common around the world. The most vulnerable businesses are those very small businesses employing less than £2.5 million pounds sterling. And we are in the UK, we have a problem that the banks cannot get money quickly enough to these businesses, although they're trying very hard. These businesses employ millions of people, mostly young, and it is true that they are likely to go under unless lockdown is relaxed in the next month. I want to show you the UK economic pipe, and the split of expenditure in that pipe is similar in all mature economies. So the biggest flow through the pipe is household spending money, the next biggest flow is government spending money, and the third is investment spending by businesses. This is what I knew the position was when some of us met in Rome, and I was saying the real money supply growth in a country like the UK will produce a 2% GDP growth rate, possibly more if velocity picks up. And I argued the same for America, for Europe, and for Asia. I said, you know, it's going to be a good year. If we now look at the UK pipe as it's likely to be over the next 3 months, you'll notice that the real money supply has increased. Well, the rate of growth has doubled. And you'll notice that in our pipe, the share of spend is changing. The government is increasing, households are decreasing. It still means as soon as lockdown is over, the economy will grow by the end of the year, but probably not by much. So, just to summarize so far, there's plenty of money in country pipes and more is steadily being created by government. All we need is that money to get through the pipe by allowing people to move around, socialize and shop. Here are some of the indices you'll be very familiar with. This is retail footfall in Europe. If we go to the Eurozone, this is the services purchasing managers index. In March, 28 is the lowest that's ever been seen. Service sector is around 80% of the economy. You are all in the service sector. In America, it dropped to 38%, to 38. So yes, there has been a massive collapse in March. China, however, and Kai mentioned it earlier, China manufacturing rebounded in March. A score over 50 means expansion. So China is growing again. Money is beginning to flow through their pipe. Now, the key is when can countries release lockdown? When can we allow the flow to go? And this is the model that's being used by the British government, and this model is common around the world. In Britain and in Europe, we have lockdown because health services in countries have limited capacity. And lockdown is to ensure the health services are not overrun with COVID-19 patients. If you look at the UK, our peak infection, peak hospitalization rate is going to be in the next 2 weeks. And then the model says you will get most of the population becoming immune and everything clears up. What we've done is in that second graph on the right-hand side of the screen, we have taken the peak down through lockdown. And it means that when lockdown is released, there'll be another peak around September. But if the health service can manage this, it's perfectly okay for government in the UK to release people by the end of May. And yes, we have another bout of infection and a peak in September, but the health service can manage it. So I am still of the view that Britain's lockdown will be over by the end of May, and because our infection cycle is almost the same as most of the EU, Spain is a bit ahead, I expect other countries to do the same. We do have a problem though, and that is that some countries are using a different model, and America certainly is, and I want to share this model with you. This model comes from the Boston Consulting Group, and their model is more disappointing. If you look at column 4, they then, in their model, show when the earliest lockdown end date is. And you can see, yes, they've picked up that China has ended lockdown, but in Europe, it looks something like at the end of July. They're saying South Africa, the end of August. With models, you choose the model that you think is most realistic. I believe the one the UK is using is the most realistic, but however, this model will be influencing government opinion and indeed media opinion. Now, a prolonged recession, an L-shaped recession, takes place in Western economies when people save much more money than usual because the value of their key asset is falling. That's their house. If you look at their chart there, the collapse of stock markets affects some, but not most. However, a collapse in residential property prices affects a lot more. In most countries, it'll be over 50%. In Germany, it's over 50%. In Italy, it will be 80%. In Britain, it will be 66%. In America, about 66% too. So I don't think house prices are going to fall over the 6 months from now. At the moment, there's no way of valuing a house because no valuers can go out and visit. They're in lockdown. So prices will stick. And for me, this is a key reason why there is not going to be an L shape. Again, if we look at the pattern of the infection, Italy has peaked, Spain has peaked, the USA, unfortunately, I think has got a long way to go. And I suspect the UK is going to peak in the next month. Now, you've heard on the news that Italy had many more deaths than South Korea, and people talked about, well, was it because the Koreans were more sophisticated and so on? I think it's basically because of demographics. It's just Italy has an awful lot more old people than South Korea, and we know it is the elderly who are particularly vulnerable for bad responses to the infection. So, this is my opinion. As soon as governments release lockdown, economies will take off. And in Britain, we know that if we can get released by the end of May, it will save most of those small businesses because they had about 2 months cash. So it will happen just in time. Some of you might wonder what will happen to exchange rates. Well, because central banks all around the world are creating all this new money, the relative amount of new money between countries hasn't changed much. So in general, the current value of currencies will be pretty much maintained. There will be some exceptions: Venezuela, Argentina, Turkey, and Russia. If the value of oil rises because OPEC reduces supply, if it goes back to 60, the ruble will gather value. Now, if we look at the global situation, what I've done is put some guesses as to what I think is going to happen over this next year. Just for context, you'll notice after the SARS epidemic, global growth didn't collapse. After the swine flu epidemic, it did, but that's because the banking system collapsed. That's because the money supply in major economies basically stopped growing, or in some actually reduced. So that very deep downturn is because of financial system failure, not because of swine flu. Zika impact, you can see, they're barely perceptible, but COVID, well, yes, it's clear that the impact is considerable, but I believe it will be short-lived. So I'm going to say it again. This global recession is like no other global recession. It is not due to a shortage of income, it's due to a shortage of spending. And because of central bank money creation and this being distributed in wage support and loans to businesses, we are actually increasing the global money supply. Each country's pipe is filling with water. And by September, sorry, not water, money. By September, there'll be 10% more spending power in the global system. So as soon as people can unlock and spend it, it's going to surge. The issue for your businesses, because so many of the shows depend on international travel, well, I'm afraid it's more pessimistic for you, because I suspect no one is going to travel, or their company won't let them travel, until they are absolutely sure that the countries they will be visiting are virus-free, and those who may also be at the conference or exhibition are coming from virus-free countries. And I suspect this will not happen until 2021, probably about a year from now. However, those shows that depend on local markets, travel within countries, that will increase as soon as restrictions are lifted. We're seeing this in China today. Now, some people are saying, well, the world is going to change forever, and it means that people will be doing more of what we're doing. They'll be using Zoom and other software to have meetings like this. It's very good to talk to you in the way we are now, but I would much rather be seeing you in person. We are social animals. We are all locked in our cage right now, and the mental angst of being locked away from other human beings will increase its toll, and governments will know that as soon as they can leave people to go out about their business, they will. Indeed, in this morning's paper, the British government is considering allowing people aged between 20 and 30 to move around as normal. There's 4.5 million of them in the UK, and their death risk has been calculated at a maximum of 500. That's out of 4.5 million. Now, around the globe, countries are responding differently to what's happening. The Asia-Pacific governments have the most headroom for massive fiscal expansion, massive increases in government subsidy and support. I read the other day, South Korea government is offering cheap money to boost exports, but it's restricting the entry of people to the country. Singapore is about to ban all public gatherings. Hong Kong is looking at implementing a wage subsidy scheme. Thailand government has now announced $58 billion stimulus. So in most countries, the pipe will be filling. The potential for a very strong V-shaped recovery is there. I do, however, think there are 3 particular countries where there will be a more prolonged downturn. And I don't like saying this. I actually think the USA is going to suffer more than most for 2 reasons. One, federal money seems to be going to those states who are Republican. Dear Mr. Trump at work, I suspect. And it's clear that many Americans are tending to ignore isolation requests, particularly in Middle America. And that, of course, will result in continuous spread. I also think India is going to have a tough time because income support schemes for the low income, and that's about 45% of the population, well, they're non-existent. And unless it's changed in the last 3 days, the South African government is reluctant to act. And I do believe the spread through those townships in South Africa could be a disaster for that country. So here's my conclusion. The next 6 months will show GDP falls of around 5 to 7% in most countries. But the fundamentals in the pipe are, as soon as lockdown is open, next year we'll see growth globally of 2 to 2.5%, which is the long run trend. In the advanced economies, budgets are the most expansionary since the Second World War. Governments are the fiscal accelerator, the government handout, as it were, flat on the floor. And I suspect in 9 months to a year's time, your issues are going to be, do I have enough people? Are my premises large enough? Is my supply chain sufficiently organized enough? And there is no doubt dealing with inflation. Inflation in our global system will take off because of that 10% increase in global money supply. So the challenge, as soon as this is over, will be managing higher than expected sales whilst automating your processes and finding new ways of working. I know that's a bit hard, but thank you for concentrating and listening, and I'll now try and answer your questions as they arise.
Thank you, Roger. That was indeed a lot to take in. And if you could stop sharing your screen. Thank you. Wow, a lot to take in. A V-shaped economic recovery preview, but a lagging effect on especially our industry, as we are so relying on people traveling to attend exhibitions and events. Now, we've gathered a number of questions during your presentation, Roger, and I would like to call up as many of them as possible in the remaining time. A few of you have already been asking whether the slides or this talk will be available. Just to answer all of this, we will send an email to all participants afterwards. It will include a link to the slides as well as to a recording of this session, so you can rewatch on demand as well. Sandy Angus, if I could ask you to share the question you posted on the chat first. I think we will unmute you, and if your video is on, the screen will be yours. Sandy, good morning.
Good morning, Roger. Very good to hear from you again. I'm concerned really with when liquidity will come back into the market. You've answered that to a great extent, that when lockdown ends, that liquidity will return. But my experience is that people are very, very nervous right now, and they're concerned that this is going to flare up again in various places. And liquidity will be a very start-stop kind of a process. So I don't share quite the optimism that you have outlined today. But I just wonder if you really could put that into context, because right now nobody is paying anything. We've had virtually no money in now for at least 2 or 3 weeks. And I'm just looking forward to the time when that changes, but it's all about how quickly the sentiment has turned. And you say it will turn again very quickly when lockdown is over. I question that, and I just wonder, knowing how difficult it is for people to change their attitudes, what you think it is that is going to give them that sense of confidence, which is what this is all about.
Good to see you, Sandy, and very good question. I think it depends on sectors. For example, if you take UK restaurateurs, notoriously bad payers to their suppliers, and the moment they are allowed to open, I think they will hang on to as much cash as they can. But I've been talking to businesses in the UK over the last 2 weeks, and most of them are using the government schemes. Many of them are actually getting funding from their bank because they've had a long relationship with them, and they are paying their suppliers, and they're also paying their people. However, your point, they can only manage the rate of payout for the next couple of months. So they are hoping and praying that by the end of May, there will be more money coming through the act of selling. I think a lot does depend on press comment, media comment. You're based in the UK, and we will know next week the government's view on when and how it's going to relax lockdown. The sooner as we have a view, the sooner as we get a date which is nearer rather than further away, then I think confidence will return. If, however, we get the impression government thinks lockdown is another 6 months, then my view of the next year is totally wrong. I think we are then in trouble.
Great, thanks, Roger.
Indeed, thanks for that. Let me bring up next Hugh. Hugh, I don't know where in the world you actually are, whether in Europe or in Asia currently, but you were trying to find some perspective on the bigger scope of things. So if you're with us, we will unmute you and you will be on screen. Hugh, please.
Hello.
There you are. Yes.
Okay. Hi, Kai. Yeah, guten Tag. Thank you, Roger. Yes, I'm not as optimistic as you are, actually, because I think the big thing is actually confidence. I actually think there are whole ranges of industries that are going to have a very, very difficult time, even beyond 2 months. But the thing that we as an industry need to focus on as the exhibition industry is how do we actually rebuild confidence? Because as soon as finance directors strip out marketing budgets, you actually need value added or profits to be seen to be coming back before they can be increased. So I think our experience, I'm in London actually, in London in the mid-80s was that it took at the very least 2 years before the time lag that we faced began to ameliorate. And the big question we also have, of course, which is different from your very interesting analysis, is the travel restrictions, because we are part of the confidence and business travel industry. And if you look at what's going on today, China have just stopped all exhibitions, although people are hoping to open in May. I think we're in for a long period of pain, I'm afraid to say, and many of us, including myself in Zhengzhou, will have to fight for their survival. Now, on the more positive note, I was very impressed with Hong Kong scheme that their government came out with pretty quickly to support and pay license fees at venues. And in Zhengzhou, we've got a scheme that would give them 40% of their license fees. And I think this is a very clear and positive message that we can give to all of our city governments, that maybe they should understand the importance of exhibitions and follow suit with something like that, because that will help us to incentivize buyers to come back to our trade shows when they'll still be feeling nervous for a long time, I guess. So I wondered if you would like to focus a bit more, Roger, on the exhibition industry, because we have a very serious time lag, I believe, that will go well into next year.
Hugh, thank you for your question. When you refer to the 80s, I suspect you were looking at 89 to 92, and that in particular was due to a failure of Barclays and NatWest as banks. So it was a money supply issue fundamentally. And we don't have a money supply issue this time. There'll be a Deloitte survey of finance directors in a month's time, and we'll get a sense of what they're doing from that. And I'll try and post that for UFI members. When it comes to your industry, I agree there is a much longer lag, and that's why I would guess that you will not see much improvement unless it's a local show until this time next year, or even possibly later. But having said that, you gave some examples of where government is very quick off the mark. And I think this is what makes this time very different from all previous times. Governments have it in their mind to do what it takes. And I believe they will, with newly created money from central banks.
Thank you. If I could just add then, surely this is going to be very inflationary and put up costs and interest rates in 18 months or 2 years' time.
Hugh, you're absolutely right. I think it's certainly going to be inflationary. And yes, interest rate increases will follow probably 2 years from now.
Okay, thank you very much, Roger. Thank you, Kai, for letting me ask the question. I will turn the mute off.
Thank you. Again. Thank you, Hugh. And that's very, inflation as one of the outcomes of this whole situation. John, let me bring you up next, because different countries are showing different economic responses and are also in different economic shapes right now. So what was your question?
Yes, thank you very much, Roger, for your explanation. Yes, some countries were struggling already a bit with their economy and with some sectors, like the German car industry was, I would say, looking for new opportunities, to say it in a positive way, already before COVID-19. Do you think that some countries will be more affected, and especially the Northern European countries, by this collapse? And the other question is, do you think that there will be a shift in wealth, and especially the gap between the young and the old people, as a matter of fact that the pensions are also under pressure, and will be this also be more affected by this COVID-19?
Thank you for your questions. Yes, I think the global car industry is under pressure because of electrification, because of more awareness of pollution, and because, of course, there have been problems with playing with software to show that emissions aren't as bad as they are. So I think that's a sectoral issue. And yes, the motor car industry is very important to countries like Germany and indeed the UK. But there are lots of other sectors that I think are going to do very well as soon as the spend comes through. Now, the pension funds depend on obviously stock valuations, and with so much more money in the global system, I am sure stock markets are going to recover quite quickly, and so pension pots will be restored back to the values they were at the end of last year. Well, if I look at my own situation, I'm certainly hoping that's the case. When it comes to the distribution of wealth, I think we have an issue here. I think there's a big difference between the distribution of income and the distribution of wealth. For young people, particularly after tax in Europe, the distribution of income, apart from the very, very top earners, is not that bad. The issue is the distribution of wealth. It's those young people who do not have property. They're the ones who are a lot less wealthy than their parents were at the same age. I don't see that changing in any time soon, apart from I do see in Europe, particularly in UK over the next few years, the introduction of property taxes to distribute more wealth from property owners down into non-property owners. But to conclude overall, I don't see a step change in the structure of our systems as a result of what's happening today.
Okay, thank you.
Thank you for that. Next question, Stephen Brooks, goes over to the UK again.
Hi, Roger. Nice
Hello,
to hear your voice. It's not often we're more pessimistic than you are. It's finally happened. I've got two questions now, actually, one on inflation and one on the banks. So on inflation, I wonder what scale of inflation and timing you could imagine, given the financial position. And on banking, is there any scenario in which you could see the banks getting into trouble? The fact they got into trouble back in 2008 was a mystery beforehand, and for many of us, even a mystery after it happened. And the idea that the banks are somehow terribly secure now, just be interested in your view. Is there any scenario in which you could see a banking crisis creeping up?
Stephen, taking your second question first, in 2008, the amount of core capital British banks had as a proportion of their balance sheet was 1.8%. Today, the amount of core capital is 15%. So banks have masses of shareholders' funds to cover some losses that are indeed going to come through. I think the default rates will certainly be doubling over this next year or so, but the banks will survive that. I have absolutely no concern about banking collapse. Possible in Italy, but then there'll be a bailout if that happens. So no, I think the banking sector is resilient. On your question of inflation, if you take the average rate running around 2% now, in a year, 18 months, I think we'll see 3 to 5%.
Okay, interesting. Thank you.
Pleasure.
Thank you, Stephen, and thank you, Roger. The next question, let's go to the Middle East. Saif, if you hear us, let us unmute you and bring in the view from that part of the world.
Good morning, everyone. Hi, Kai. Hi, Roger, and everyone. My question is, Roger, you mentioned a very positive comeback for the exhibition industry. I see personally that it won't be a V-shape kind of, it will be more of a U-shape. We in the United Arab Emirates, for example, in the Middle East, like pioneers in the exhibitions in this region here, and we felt it strong. The government has done good kind of incentive schemes and program. But I believe personally, from what we see now, by Q1 2021 will be the most comeback, because the regain the confidence back will take some time. And you know, the summertime is coming. And also we have a season here in the Middle East, the Ramadan season, where people are fasting. So we don't feel the comeback will come only by the end of Q4 this year and starting by first quarter 2021. What I wanted to mention is that you mentioned that India and China coming back strongly. Do you have any take on the Middle East, at least, or the GCC region where we have Saudi Arabia, Kuwait, Bahrain, Oman, and especially the UAE? Do you have any numbers there post COVID-19 that can be helping us? And the second question, sorry, I would like to mention that now the hot topic is going virtual exhibitions and so on because of the distant that you cannot meet people now. So how will this affect the venue owners like us in the region here? And will it be a temporary thing, or it will be something that will be, looking at, that we should look at in the future? Thank you.
Thank you for your questions. I'm afraid I don't have data on COVID infection rates for the Middle East. I expect the data is available, but I haven't seen it. All I would say is I would expect the curves to be the same as for every other country. When it comes to your industry, yes, I accept that we'll get a V-shaped recovery in economies, but the response for you will be lagged. I do accept that. And that international travel issue means that you are going to be at about a year behind. I think it would be fair to say. In terms of the Middle East, of course, the oil gas price is a key driver overall, and the record lows of the last 3 or 4 weeks will have been a problem, but I understand that OPEC is going to begin to restrict production to bring the price back up, and I suspect they'll try and get it back to around $60 a barrel. On the virtual versus face-to-face, I still believe that it will be both. There will be some people running virtual trade shows, but I think you'll see both. I don't see the fundamental of a lot of people going to a nice part of the world to meet and greet, share experiences and look at new equipment or new ways of, I don't think that will disappear. We are what we are. We are social animals.
Excellent.
That would be a great way to close the conversation. We got 5 minutes and I'll try to get 2 more questions in though. The next one goes to Eric Abramson. If you can hear us, we will unmute you, and please keep it short so we can get 1 more question in.
Yes, good morning,
Eric.
everyone. Can you hear me?
Yes.
Okay, hello. Thanks, Roger. Thanks, Kai. Saif just asked the question about virtual meetings, so I won't go back on that. My biggest worry is the Boston Consulting Group's data that you shared with us, because assuming that Western European countries are not under a lockdown until the end of July, I think the local economies are just going to collapse. And also, the central banks are printing out monies like crazy right now, but who is going to pay in the end? Thank you for sharing your thoughts on that.
Okay. I agree that if the Boston Consulting Group model is correct, then my V shape is wrong, and we will be looking at a more extended U shape. So you choose the model you prefer. on central bank money creation, there's a little technical point here. The central banks create the money, and with that money, they buy government bonds.
Mm-hmm.
The government pays interest on those bonds from the tax receipts. But if the central banks hold half the bonds in issue, the interest is paid to the central bank, which is owned by the government. So that interest flow is a circle, and it actually doesn't matter very much. Although over time, the remaining 50% of bonds that aren't held by the central banks, government indeed will have to raise taxation to cover those interest bills.
Thank you.
Pleasure.
Thank you. And time for the very last question, and it goes to Deepak. If you hear us, we will put you on speakerphone.
Great. Thanks.
There you are.
Thanks, Roger, for the beautiful insight and on the global economy. My question is basically, when do you foresee the global cross-border business opening up, looking at the different countries putting different lockdowns, different restrictions in place? How does this going to impact the local business in terms of cross-border import and exports?
So there again is the crystal ball question, Roger, to wrap things up. When will we see cross-border trades, cross-border shows, cross-border? When will we all travel again and see each other?
I don't think we'll see much improvement in that till this time next year.
Okay, that was a very...
Cross-border intra-activity, I think, is going to happen more quickly by August.
Okay, so there you have it. As always, a pleasure, Roger, and thanks for sharing all your insights. Let me share my screen in closing, just to make sure that, what do you see now? I have to go on this one, right, and put you all to the side probably. We have not been able to approach them to us, and we will follow up with Roger. We will also send you an email after this session that will share the slides and the link to the recording of this session, and also ask you to give us feedback in a very short survey. If you want to share some of the findings, some of the key messages today, of course, feel free. This was an open session, and we are sharing the contents, and you're free to share your major takeaways on social media as well. Now, thank you especially to our diamond sponsors, the Thailand TCEP there, the Qatar National Tourism Council, Shenzhen World, and Freeman. There will be the next, let me stop sharing the slides. There will be the next UFI Connect session next week on April 15. The theme will, I think the registration link is now up on, there it is, thank you Pascal. I think the registration link is now up on ufi.org/UFI Connect. That's all from us today. Thank you for being part of this meeting. Thank you again, Roger. And we hope to have you back to discuss the upswing of the V and the developments for the industry on another session. All of you who go into the Easter weekend, happy Easter. All the others, enjoy your weekend, and see you soon at another UFI Connect session. Thank you for joining us.